What's up, guys? Welcome back to the channel. Thanks for tuning in to Stock Essentials. Today we're going to be going over AMC and what you should be doing with your shares. So a lot of you are holding shares, you're waiting for the stock to squeeze, and it's just staying flat. It's consolidating. So AMC, we're predicting it's going to be a it's a slight upward squeeze rather than something rapid like what happened to GameStop earlier in the year. Um, a lot of the attention on AMC has been dispersed across other highly hyped up stocks that these news outlets are trying to pump up to divide the apes. So AMC, it's still holding really strong. As we can see, it's 56 or $58 currently, up 4.6% on the day, which is a pretty good day considering it was down 7.45% when the markets first opened. So it's a pretty good increase, which is about 11% from its lows today. So AMC, it's holding really strong. The ape community is holding their shares, they're holding their ground, and this is making these short positions, these hedge funds, really nervous. They don't want AMC to be at this price point because right now they're still down quite a few 100% on their short positions, just waiting and hoping that AMC hopefully fades away and the hype dies down, and then they can sell, they can close out their short positions once the stock drops even further. But the ape community, we're holding really strong. I'm still holding my shares. And if you want to do a little bit more, this is a good strategy to do against your shares. It's to sell covered calls. So selling covered calls is a great way to collect premium, basically hedging your shares. It's going to take some risk off the table while also providing you some weekly or bi-weekly income. So for example, let's go to the options chain. Instead of buying a call, we're going to be selling a call. And this is a really good strategy because the call options are really expensive. The premiums are a lot higher than normal because implied volatility is very high. So selling premiums would be a good strategy for this stock. So for example, if you wanted to, you could do something like a $90 strike call for this Friday. That would be 3 days from now, and you would collect $74 of premium if the stock price basically almost doubles, which would be a good return on your money for you as well as hedging your position. You can either do a $100 strike and collect $58 of premium. I don't think AMC will hit 100 this week. If anything, it would happen next week. So a $100 strike would be pretty good, and you collect $58 of premium for every 100 shares you own. And of course, if AMC hits $100 or above, you sell your shares at $100, which is basically doubling your money from this price point. So you could also do a July 2nd. This is what I would recommend. You have a little more time on your hands, a lot of more time, so the premium can bleed out, because when you do this short of an expiration, most of the premium has already bled out. So we want something with premium that hasn't bled out as much. So as we can see, we can go pretty far up the strikes, and we can collect hundreds of premium for really far out the money strikes. Selling a 145 strike call every single week would be pretty good. You collect $156 of premium if you choose the July 2nd expiration date, which is a week and a half from now. And that's pretty good. So if AMC doesn't hit $145 by July 2nd, you're going to collect a full profit of $156 per 100 shares, because this is a covered call. Remember, we're selling these options. In a covered call, you need 100 shares in order to sell a call as collateral. But if AMC does hit $145 or above, if it goes to say $200, you sell your shares at $145 each, which is a 200% return on your investment from the current price. It's tripling your money, which is going to be pretty good. So either scenario, you're going to be making some money rather than just sitting on your shares while the stock is consolidating. So this is pretty good. If you don't think AMC is going to go that high, 145 within the next week and a half, you could go a little further down the strikes and collect more premium, such as a $100 strike for $256 of premium for every 100 shares you own, which is also a great strategy as well. I'm planning personally on selling a 145 strike because open interest is really high, so you're going to be collecting a lot of premium on this far out the money call option. So You could also do a 140 or 135, but I'm personally doing the 145 strike calls in case AMC explodes one of these weeks, so I don't want to take too much of the profit off the table. But that's about it for this video. If it helped in any way, please leave a like, comment down below what your thoughts are. If you have any questions about covered calls, this was just a brief little video of a strategy to do against your shares. If you want me to go into more depth on covered calls later on, comment down below. Subscribe if you're new to the channel. Helps out a lot. Thanks for watching.